Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Good morning, Jim, and it's good to be with you.
Sears Canada has court permission for its total liquidation, throwing 12,000 people out of work and ending a long history of retail in Canada. We're also told that their pension fund was underfunded by $100 million, throwing the future of their retirees into doubt. Bob, what does this mean to Canada and Canadian retail?
Well, the first thing is, of course, it has not been working. The way the markets go is that when something doesn't work, it gets to go out of business. And they tried, and they had to go through these court proceedings because the creditors are the ones now who have the power. So they're looking after their protected creditor side. And unfortunately, there will be a number of people laid off. And then, as you mentioned, the pension plan. Now, the pension deficiencies, or this one, I don't know, I guess outright failure, it exists everywhere because there's been far too much promised down the line by the way of pensions, and they also, for the last 10 years with pension fund management, you have certain actuarial withdrawals, and they have assumed certain returns from the fixed income side. Of course, the fixed income side went down to effectively, zero returns. So it's a problem everywhere. But as to Sears going down, when they started up as Sears Roebuck in the States in the 1880s, they were a formidable marketer and put a lot of corner stores out of business, I guess. And this is the feature of a free market economy, is that when you're doing the right thing, you get the business and you get the prices you need for the products you're selling. And then when you're no longer got the right mix of products, you get to go broke. And that's the one thing about it. Whereas if these were government enterprises, as used to exist in communist countries in Eastern Europe, they get to go doing nothing forever. So sadly, there was a economist many decades ago, Schumpeter, who pointed out, he called it creative destruction, and the side that is not working gets destroyed, and then the capital will be attracted to the side that is working. So, one, it's sad to see a name go. Two, it's sad to see people dislocated by this. And three, particularly out to the pension side. But that's market forces for you. So other than being sympathetic, there's nothing that you and I or anybody else, or in particular any government, can do. It's market forces at work. So we'll watch and see what happens with it.
Should you, if you're a person who has a company pension, check to see if there's enough money in your company pension for you to retire?
Oh, yeah. Yeah, everybody should be looking out for themselves, not in a brutal way, but just to make sure. It's also wise to build your own savings, and not particularly rely on a government pension plan or a pension plan with a company, but it's nice to have both. But this instruction is that people have got to save up for a rainy day. It's an old saying, because all of a sudden there's a lot of rain on people who are working for Sears.
We'll have more with Bob Hoye right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Welcome back. We're speaking with Bob Hoye. Bob, what lesson can other retailers learn from the Sears experience?
Well, it's kind of tough if you've got the marketing and purchasing side on a large retail organization. If they get slightly out of sync, I remember many decades ago, had connections with the people at Woodward's on their investment side, the large Western Canada department store operation, and they were confident. They had the very good buyers. They were aware of fashion and changes and all that sort of stuff. And then all of a sudden, none of that was working. The market had changed, so that was Woodward's. Now it's Sears, and it will always be the same. One time, Walmart was the threat to many retail organizations, and now Walmart is now, the threat is knocking on their doors. You got Amazon and stuff like this. So, although the dislocations happen with a free market economy, the benefits net out to the consumer all the time, and unfortunately, though some employees are going to be dislocated, but that's the way it works. So, whereas, say, individual employees within Sears, they would know which way the wind was blowing. And maybe the more alert did move on and over to more successful retail organizations. So, it's sad, but it's life.
And we saw Eaton's go under as well several years ago. Same problem?
Yep, the same thing. They just didn't, they get it right, and then they don't get it right. But there's always, this is the marvel of a free economy, is that you've got businessmen and businesswomen out there with an idea that for a product or a service, and they think it's really good. So they then raise the money and try to put that product in front of you so that you can buy it. So you've got the whole of the entrepreneurial community out there trying to service and find what you want. Hey, it's a pretty good deal. And then when you don't want it anymore, you don't have to buy it unless it's a government service. So, fascinating, Jim.
We'll have more with Bob Hoye right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of northwestern BC. Check us out at blindcreekresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Bob Hoye. Bob, the price of copper is near its yearly high again. Why is copper so popular right now?
Oh, it's become... it's acting well. It has been. The base metals, zinc has been brilliant. And it had the high a number of weeks ago, and then it's going up to test that high. I kind of doubt that it would get beyond. You've got tremendous enthusiasms out there now, measurable enthusiasms. Just saw University of Michigan survey of those who think what the stock market's going to be doing in the next 12 months, and it is at a record high, higher than in 2007 and higher than in 2000. So, yeah, the bulls are in the market, and as the quip goes, the bulls always know when to get out. So, copper, base metals, yeah, we can look for, well, in our work, we figured the base metals, industrial commodities, which includes base metals and mainly crude oil, would be firm into September with the stock market, which is what we got. So it's continued further into October, which is fine because these months, a date for September is sort of like around September. But you do have technical excesses, dynamics. You've got sentiment figures very robust. And you also have the valuation I like on the S&P is where you take it and divide it by the average wage. So it ends up with how many hours of work you got to do in order to buy a unit of S&P. And it is now even higher than it was at the insane market high in 2000 with the .com thing. So there are a number of indicators that are up at danger levels, seen only at exceptional highs in the stock market. So the thing is, when will it roll over? And we're looking at the telltales, which would be the yield curve. And that's the difference between long-dated and short-dated treasuries. And it has been favorable for the stock market. And we're now, that this trend of what we call curve flattening is now out to 14 months. And this is within the window a month or so of when the yield curve could change. And then the other side of the credit markets are credit spreads, which is the difference between high-grade and low-grade bonds. And it attempted to break out in August. We were talking then about the second breakout on the trend change to widening. Well, it didn't do it with enough drama. It backed off, and so now we're watching for the next attempt for widening credit spreads. And the way to look at it, Jim, is that with such measurable amounts of speculation in the financial markets, that means also beyond the stock market into like low-grade bonds. Of course, that's what the credit spread is all about. So you have the exceptional action, and you have the potential building change against that from the credit market. So we'll just wait and see how all of that works out. One of the positives for the stock market, of course, has been the action in crude oil. And when it's rising, it's friendly to the stock market. And as I said, we had crude being firm through into September, which it has. It got up to 52. There was resistance between 52 and 53, so it got up to something like 52 and a half. And is beginning to correct. On both these key items, copper, you can have a seasonal low in November, December. And then for crude oil, you can have a seasonal low in sort of December, January. So once this speculative interest now eases or gets tired, then the direction would be down on a seasonal basis into perhaps January. And you'll remember into January, February 2016, when there was an absolute panic as crude oil crashed down to $27 and junk bonds were under tremendous pressure. And then junk bonds are important because this year the sector of junk bonds, high yield, whatever you want to call it, has shown outstanding returns, one of the best. So that's been now, of course, when you've had something that's been showing a consistently good return for more than a year, it then becomes a very popular trade, and when it becomes a popular trade, there's too many in it, and there's not enough left to go into it. So the credit markets have been doing what they should be doing, but they're now getting ready to change, and I think then the change in the credit markets will then pull the stock market down, and so that would be, as I said, credit markets and industrial commodities down until late in the year.
Bob, a few more items here. The Ontario Securities Commission says regulators are struggling with short selling. Should short selling be banned?
No. There was a bit I saw on TV about this morning, and they were concerned about short raids against individual companies that then can be strong enough to dislocate those companies, especially if they're sort of financing out of the stock market. But no, shorting is a very important part of the financial system, and the reason for that is, first of all, let's define a short, is that when you sell a stock that you don't own, you sell it ahead, and then you owe that stock to whoever bought it. And as Daniel Drew said in the 1840s, he that sells what isn't his'n must ultimately deliver or go to prison. So then a short seller has to deliver the stock. So then, but the idea is if you sell short at $10, hoping to cover at $5, so you sell the stock 1,000 shares at 10, and you buy 1,000 shares back at 5, you made money on it. But the service to the market is that for all of those short sales, it provides liquidity when there's an insistent bid. And then also when it goes the other way and stocks are falling, you've got a short covering bid there. So shorting provides liquidity to the market, and that is essential. And this is the only reason why you have a publicly traded market, is to provide the shareholders with liquidity. Otherwise, you have it private. So the financial markets overall are very constructive, and short selling is a very important part of the financial system.
The Nasdaq wants to start up an exchange in Canada. Would that be a good deal?
Yeah. The more liquidity, the more transactional services you have, the better. Those who sort of own the Toronto Stock Exchange may be apprehensive, but it's more competition. And again, it provides more liquidity to the marketplace, which is constructive. Now, liquidity has been diminishing. It's been too much of a one-way street, particularly on the bond side with the Treasury market and Government of Canada market. Liquidity has been diminishing because it's just a one-way market, and yields are exceptionally low. But interest rate markets can go back to more of a normal condition, and the stock markets, of course, as Richard Russell, the Dow theory guy, who is writing a market letter from 1958 until recently when he passed away in his 90s, he had a fabulous line for an exceptionally high stock market, and he would say, stocks are going to go to great valuations. So if you've got a stock trading at 3 times book value, and it goes down to 1 times book, then that's a great valuation. So there's a certain irony in that. And that's something we can leave with our listeners, that Richard Russell's ironic observation is that the stock market can go to great valuations again. And I'm not saying what those would be, but you would use the standard book values and multiples, PE multiples and things like that. And because things are quite exceptional, as I said, the valuation relative to wages is, hey, off the chart, to use a phrase, and the markets always correct excesses, whether it's like on the upside now or at some time down the line when there'll be excesses on the downside. So the markets are always fluctuating, as J.P. Morgan said, generations ago.
Bitcoin has passed $5,000 US for the first time. Is Bitcoin the equivalent to tulips back in whatever age that was? Bob, you were there. Tell us about it.
Oh, yeah. It's been incredible. The chart on it, it looks like just any other blow-off, whether it was the first one with the South Sea Company in 1720, or with Radio Corp of America in 1929, or Cisco in 2000, or Bitcoins now. There's sort of a biological function in there where the crowd acts like a trained animal and does the same thing. So the Bitcoin thing reached measurable excesses. It followed a pattern that my colleague Ross Clark has, and to the blow-off, which I remember talking to on a radio show as it was happening, saying that the next step on this is straight up, and you don't know ahead of time how high is up and how long the surge may last, but it might be weeks, and that's indeed what it is. So it looks like a classic blow-off, whether it was gold in 1980 or the Nikkei in 89. There's the same character, and I think it's concluded. Now, it also has some importance to the overall financial markets because it did become a global phenomenon as part of a bubble, and if it fails, that's an important part of bubble action, and it would be a downer for the speculative community. So it's worth watching. It's been fascinating to see how it conformed to the chart on the way up, and we'll see how it conforms to the chart on the way down.
Bob, thank you so much for chatting with us.
Jim, always good to be with you, and we'll look forward to next week.
My guest has been Bob Hoye. He's a market historian at institutionaladvisors.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. You can forward questions to the show or Bob to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of Howe Street Media Incorporated.